everyone, and welcome to your Daily 5 for July 31st, 2023. I'm Leslie Jouflas of Trading Live Online, and as many of you know that have been following my Daily 5 videos for a while, I do these 2 or 3 times a month. And on today's segment, we're going to do an update on the indexes using the S&P 500, the triple Qs, and the Dow Jones Industrial. And then I want to take a look at Intel because I believe there's more upside potential. So I'll show you what I'm looking at on the charts. And then I also want to go to and spend a little extra time instead of doing more charts today, a little extra time on the symbol NIO, N-I-O. And I want to point out a few things for you on that was part of my analysis early on with this particular stock. And then I'd like to bring to your attention on my website, if you're interested in the type of analysis that I do, I just did a presentation this last week. And if you would like to view that, you can go to my website, Trading Live Online. In the upper tab, you'll find the trading blog. And if you click on that, you will find this presentation there. And it's about 1 hour, so grab some popcorn and something to drink. Okay, let's get to the charts. I'll start with the S&P 500 today, and as you can see, we've been in a really nice uptrend since last October. However, we did get some several months of arranging back and forth, and that finally broke out above the 4,200 level, which is now a pretty important level for the market to hold on any test to the downside. These yellow circles are just showing us where some gap areas are to the upside. We are in a resistance zone right now. When I say resistance zone, this is just where the market is going to be testing the price levels around this area. So on a Fibonacci retracement ladder from the high from 2022 down to the low October 2022, that's what I'm using for this retracement from high to low. So you notice that the market has gotten above the 0.382. It just spent a little bit of time there and then popped up to the 0.50 retracement. Another test to the downside, back up to the 0.50. Kind of spent a lot of time trading around that 0.50 level. And then once it broke out of that, that was a good breakout to the upside. And notice how the 0.618, even though there were some resistance points here, the testing of that level broke right through with a gap. And you can see up here the 0.786 came right through there. And we're up to where these previous highs were back from March of 2022. Now, there is a swing that forms the ABCD extended up to the 1618. That means that we're taking the length of the AB leg and multiplying that by 1.618. It gets added to the low, and that's how you get that projection. Now the 127, the 0.127, and the 1618, those are the most common extensions of the Fibonacci extension ratios that I use because they seem to repeat the most frequently. Even though there are some others, and it does trade to some others as well, these tend to be the most frequent in the S&P 500. So the market is up here testing this old resistance area, and then just above that, if we get another pop a bit higher, it's going to get up to about 46.58-ish. Let's just call it a range of 46.50-ish to 46.60-ish in there. I don't like to work with an absolute number because the market does too much jiggling around. So we'll kind of think of things in as zones, areas. Now, the 886 is an interesting Fibonacci retracement level to use on your ladder, because this is what I call the last chance fib ratio. And you can see is between the 0.786 and the 1.0. And prices tend to find some resistance there. But one of the tendencies that I've noticed is that when the price breaks above or below, if it's a lower retracement, it holds above there, then generally the chances are very good that the price will trade at least to that 1.0 and very often beyond it and close to the 127. I think even if we get some pullback in here, it's going to be offering us a buying opportunity. I've just seen so many charts that still have bullish patterns on them, and so many charts that are now getting breakouts as well. A couple of months ago, when I did a daily 5 and we broke above this 4,200, and I said, bullish phase basically, and I did see some comments saying that there's no way, it's bearish, it's going down. Well, it'll go down when it's done going up, and I don't believe it's finished going up yet, even if we get a pullback. So if we get a pullback, I'll be looking for some type of a buy pattern and setup. So that's what I'm looking at with the S&P. We're up around the resistance. Now, you can see, as I just pointed out, sometimes they go right through the resistance, and that gives us information to work with as well. So price is in a testing process up around these levels right now. There's a bit of a pattern. I don't think this is a really super strong sell pattern. I think, again, we're just be looking at a retracement to the downside. I'm going to be using the QQQs today. So this is a chart of the triple Qs. And back here, there was this little butterfly cell pattern. Now, these cell patterns sometimes can precede large moves to the downside, and other times they are just showing us a correction. And I think that's what we have here in this case. Oh, sorry, my drawing tool is not quite getting, there we go. So this is showing us there's X, and then we get the A, B, C, D, and this is an extension again, meaning that it's longer than this AB leg. And there's been a bit of a retracement down from that, and sometimes that's all you get from these. But if we do get another pullback, again, I don't think this bull market is over, then we may see an A, B, C, D buy pattern form, or if it's a bit stronger correction, we might be able to use a Fibonacci ratio extension from that A to D, and that would bring it back down to this previous 618 level. And as you can see, there was a previous gap to the downside that should now be support, because the price was able to easily get above, close that gap, came back, retested that area, and has made highs above that area. So that's an area that I would be looking for on a little bit more of a move to the downside around that 1.27. Even a deeper one to the 1618 is going to be bringing the price back down around these levels here as a testing. There's also a bit of a gap right here. So again, I think pullbacks are going to be buying opportunities. Oh, all of the indexes right now, this is the Dow Jones Industrial, and this note refers back to this pattern here when we had the big decline down into October of 2022, and then the Dow started rallying to the upside. This was the earliest rally to the upside, and the Nasdaq was still lagging at the time, and the S&P was somewhere in the middle. So then the Dow, as the Nasdaq took over, the Dow went into this ranging pattern, but we can see there is it could be a left shoulder, head, and right shoulder, a continuation pattern for this uptrend. Now, what would change that is if price started trading below these lows here. I've marked in a couple of areas. Here's where breakout area for the Dow was, and back here, this line is just coming back in to the center area of this previous consolidation, excuse me. And the price now is just, again, testing some of these old price levels. And like the triple Qs and the S&P 500, it's in between these ratios of 0.786 and 886. So we're also on the RSI. It's still at a healthy level, but it may be a little bit overbought right now. But again, I believe a pullback is going to offer a buying opportunity with all of the indexes. It seems to be strength across the board in within different sectors that are crossing the NASDAQ, the Dow Jones Industrial, and the S&P 500. So again, I think if this pops up a little bit, then we might start to see a bit of a correction back and these levels here. And this should be good support here as well. This line right here, this is where the breakout was. So anywhere test close to that may offer the buying opportunity. So now I want to take a look at two charts, Intel and then the symbol NIO. And so Intel had its share of problems for the last couple of years. It had been actually in a very long-term range, and then a break of the range to the downside. And then it formed a range down here. It's an ABCD buy pattern down at the lows. And this is a little bit of what I'm going to be talking about on the NIO chart in just a minute. And then up a little bit out of that range, came back, tested the center part of the range with another ABCD buy pattern, and has now broken out. It did a test of the breakout area, and it formed on the last part of this leg a butterfly buy pattern, X, A, B, C, D, as a retest of that. So that type of pattern can offer the trader an entry into the direction of that breakout. Had this been extended down, well, it would depend on how severe the extension was back into this pattern. But it may have formed another ABCD buy pattern as well. But that's not what happened, and got the little butterfly pattern, and Intel has been moving to the upside. Spent a little time, several days, consolidating in this price level between about 33 and about 30, just under 35. Had a gap up late last week. Well, I believe that there's more upside in Intel, even though it hasn't been as strong as some of the other semiconductors that we've seen the last couple of months. It may be gearing up now with some underlying strength. And I'm seeing that in the RSI especially. So on this pullback here as a retest, notice how the RSI did not do a very deep pullback. It held just about 45 level, which is bullish. And now it's starting to take a turn to the upside. So I want to take a quick look now at a monthly chart. Before we flip over to the monthly chart, let's take a look at this level here. So this would be a resistance zone, meaning that the price is likely to get up to this level and test the price around here. So one thing to remember with levels like this is there were a lot of buyers, that bought, all the way up, all the way down, and they may have been waiting a long time. Let's say, you bought right here, and then the price did this, and then it does this. Well, if the price gets back up here into this gap area, you might be happy to get out at just a small loss. And so that's part of that testing process. However, if the price does get above this level here, I think Intel is going to have, more upside up towards this resistance, and possibly with this type of ranging pattern, it could be that the worst is over for Intel stock price. So we'll monitor this chart, and again, the next level is going to be up around this 30, about just under 38, and the gap close is just about 39. the highs here just under 40.41. So that's going to be a resistance zone right in there for price to be testing. If we look at, I'm going to go weekly to monthly instead of just to the monthly so we can kind of take a little bit detailed look at this. But see how the RSI is just climbing up on the weekly. It's making higher lows, higher highs, higher lows with that. And that looks very bullish to me. And the MACD back here on this pop to the upside made a momentum high that hadn't been seen since all the way back to 2021. And then on this pullback, the MACD did not do a very deep, move uh, down below the zero line on there. So that's looking bullish to me. So let's flip to a monthly chart. So you can see with this how, the longer you go out on your time frame, your indicators are going to be lagging those shorter term indicators. And that's because momentum occurs first on the lower time frames. And if it's going to work its way out to the longer time frames, then it's going to be a little bit, you have to allow more time for that. But now the RSI, again, down here at these lows, even though this low was not quite lower than this, we can still see the RSI making this higher low, and now it's starting to move to the upside as well. So again, that looks bullish to me. Also, but it does have some work to do to get through, this price level around here. But it looks like initially it's going to make an attempt to get back up to that level. But let's take a couple minutes and look at the chart of NIO. Yeah, I'm actually not sure if it's NIO or NEO, but symbol is NIO. There it is up here. I knew I put it somewhere on the chart. There it is. All right, so one thing I want to cover with you today, and if you take the time to watch a 1 hour presentation, you'll see more examples of this. And the harmonic patterns are referring to patterns such as the AB equals CD, the Gartley 222, the butterfly pattern. Those are types of harmonic patterns. So harmonic patterns are going to tend to be showing entries at reversal points at the earliest, much earlier than classical technical analysis in most cases. And this is an example of that. So as Nile was, in kind of forming this long range after it had this very severe decline from 2021 into 2022, it started forming by patterns. And so here's an A, B, C, D by pattern. Let me spread this out a little bit more. Sorry, I know this is jumping around, but I want to make sure you can get a good view of this. So let me see if I can adjust that. Okay, so this would be A to B, retracement up, B to C, and the last leg C to D. So that got a rally off of it, but it didn't go too far before it turned down again and made some another low here, another low here. But when it made this low, this formed that butterfly buy pattern, reversal pattern. And then the market, again, it made a little bit of a pop up, and then it did kind of a wash and rinse move down to about the 127 from that last larger swing. And from there, the market started moving to the upside. Now, keep in mind that this is around the earliest buy point using the harmonic patterns. And then if we follow the price action, we could use like a short-term trend line here. That could be using classical technical analysis and entry point. I have a point and figure target that was right here that was actually on stock charts. You can go put NIO in as a symbol and then scroll all the way down to the bottom and you'll see a point and figure. And at that time it was giving a target right up here around $14. Well, we've exceeded that target and it's right up testing this resistance level. This line has actually been drawn in on my chart for quite a while, and there is a gap area there, and that's just where it closed this last Friday. But this is a trending move to the upside. And if we look down, go down here, and we go all the way from the highs of 2021, and we draw our trend line down, we can see that that low that was made here was just testing that longer term trend line. It had already, off of the butterfly pattern, had already gotten, a little bit above that trend line, a little bit more here, retested it, and then off it went. So the longer term trend line has been broken to the upside. And I think what's really interesting, and one of the points I wanted to make with you today, is that generally when these types of patterns are forming on a stock like this that has just been beaten down, there's not usually much chatter going on with it. But these offer the lowest risk entries, in my opinion, in my years of using these particular patterns. And as many of you know, I'm a chartered market technician, so I have a lot of experience with classical technical analysis as well. And so it's going to be very, very quiet. Now, I've noticed recently that there's a lot of chatter going on. So people are starting to take notice of this move and jump in, which is really great for the trader that was in down here. So now there's a bit of resistance to get into. It looks to me like now it has started a new trend to the upside, and we'll continue to monitor this as well. So if you like, again, if you like this type of analysis and you think it might be something that would be useful, let me go back to my slide. Then you might start with the 1 hour presentation that I did last week. And within that, I just put out a new course on these principles that's on my website, video form, and you'll find information in there about that. So thanks for watching today. I always appreciate you guys showing up and watching and making some comments. I do try and check back the first several days at least for any comments and questions. And I'll see you on the next Your Daily 5.